This is a Forex quick for the sterling versus US dollar brought to you by Greg Michaelowski and FXDD. Let's take a look at this currency pair on a daily chart. To start off with, what the market has been hanging around here is 38.2% retracement of the move down from the high. This is a January highs to the February lows at 38.2% retracement. The move comes in at 134.21. The market is above that, trading at 154.35 currently at the moment, but we have been above and below that level over the last 1, 2, 3, 4, 5 days, with two closes above it, two closes below it, and so today is going to be the key level, whether we're going to close above it or below that 38.2% retracement. That might swing the bias either the upside or the downside. All this now let's look at the daily chart, or some of the early intraday charts, and we'll take a look at the 5-minute chart. First of all, out of the UK, what we have, some debates last night with the Liberal Democrat actually winning the debates from the Conservatives and the Labour Party. This muddies the water somewhat, and that caused the initial move down in the sterling versus U.S. dollar, then retraced back higher, as is customary. As you can see, yesterday we did the same thing. Boom, boom, boom. Boom. It just is a very volatile situation. The pound sterling seems to be in this cycle where the market does a lot of that, at least over the last month or so in that currency pair. So where do we stand now? Well, we'll take a look at this hourly chart. Obviously, we just came down and tested the 100-hour moving average in this chart. That 100-hour moving average currently comes in at the 154.23 level. The market held that level and then seems to have found some support against that level. So we're going to continue use that level as our key support level. Let's go to the 5-minute chart. Let's put a line in at 154.23.3, and to remind us of the significance of that level from the hourly chart. And we can take a look at and see that the market also has some support or some has a 100-bar moving average at the 154.34 level. That's where the current market is trading, and all this volatility has caused a 200-bar moving average to start to converge. This convergence is suggesting that the market is in this type of market, non-trending market, whether it moves up or moves down, so on and so forth. So let's use this area as our pivot here today. If the market should move above this green line, then I think we should see higher prices. If the market moves below here and then below here, we should see lower prices. This 23 level is going to be a key level here for the currency pair. So that's how I see the sterling versus U.S. dollar. Upside probably heads up toward this 96 level, which was near the close from yesterday. Downside, could head on down toward the lows for the day, being that we're pretty much right in the middle of the trading range for the current day. This is Greg McCloskey with the Forex Quick for the sterling versus U.S. dollar.